Hi, welcome everybody to Altcoin Buzz Trading. I'm Randy. Today we're going to be talking about Bitcoin. We're going to see some longer term things about BNB and what it's doing. We're also going to take a look at KAVA and see what a inverted cup and handle looks like with a low volume rise. All right, ladies and gentlemen, let's get right to it. We got Bitcoin here, which is finding a little bit of support yesterday here. Not quite average volume, but my volume aggregation tool shows that the buyers are still supporting this a little bit, as it looks like we're leaning and rolling over. That still could be the case, but we are finding some kind of hidden support down here. Let me show you on the 2-hour time frame where it's a little bit more apparent. So there's the candle. It's pretty much one candle, and this candle, interestingly enough, is across the entire market. Okay. The only coins that didn't have this candle were ones that were actually doing okay. We had a couple of trades that were working, and those really didn't exhibit this behavior. If they did, it exacerbated the bullishness. So that's something unique. Now, something we're seeing here currently actually is this is forming a doji candle. Kind of a weird place in the chart, doesn't mean a lot, but a doji candle is one that where you have the open and the close of the candle almost dead in the middle of the candle and equal wicks to the top and to the bottom. And that's kind of what we're forming right now. So I think there is some hidden support in this market, which may stop us from rolling over, even though it definitely appears that that is in our future. But if we start popping up, I think this is one of our clues right here. But one interesting thing to note is that this candle, everything since that candle has been in what's called an inside bar situation. Okay. Now, inside bar typically is only used for the next candle. So in other words, this candle here would be the inside bar to this candle here. But the fact that the next candle is also an inside candle, these aren't inside bars, but we're all living inside of this range. What that tells me is that we need to break out of this to see what this candle actually means. Because while it did close all the way towards the high, implying that it's a bullish candle, it's still, we don't have any follow through yet. So we need follow through. And if we get above this 26,020 level, I think that could be some follow through leading to some more upside movement. But while we zoom out here, we can take a look at kind of what we've built here over the past month, give or take. We had a range here. We had a range here. We had a range here. It's a little bit more narrow, right? So we may stay in this for a little bit as we build another range. But we just seem to be getting a little bit more narrow. Kind of hard to see the orange boxes there. Let me zoom in a little bit. So there's an orange box. There's an orange box. This one could get moved up a little bit. This one moved a little bit wider after the volatility, but we're back to being very narrow again. So whichever way this breaks, more than likely the market is going to go. If you remember several days ago when we talked about this down here, I was mentioning that we need more time. Usually we'll get an equal time between here and here, which was about 11 days, and between here and here, and we're on day 6. So we still could chop around for a while before we finally find a direction. Market likes symmetry for the most part for whatever reason. So we could be waiting for a couple more days of volatility before we finally get a directional move. But while my bias is still to the downside, I do want to respect these candles that are able to prop us up, because the more times they prop us up, the better. But there is an old market adage: the more times the trend line is hit, the more likely it is to fail. So if this thing gets hit and then hit and then hit, especially in short sequence and short time frame, they're looking for it to go lower. They want to sell as high as they can, so they don't let it go down. Okay. All right. That's it for BTC. We'll see what transpires with that. Let me move back to the daily time frame, and we're going to talk about BNB. So I was asked to clarify BNB a little bit. Someone asked me to do this, and I think it's good information to have. BNB, let's just take a look at this chart real quick, just big picture. BNB is a decently quality asset. It's like number 3 in terms of coin market cap. I think it still is, maybe number 4. You've got this big, large base holding up here, really up above this 182 level, okay? And you have a number of structures, right? So going all the way back, number of structures. And I want you to notice how this is shaped, right? You kind of hold this. This is the COVID drop. That doesn't count. You can't really count the COVID drop. But after the COVID drop, it came right back to normal and then just broke out. Now we're in this higher consolidation, a much larger consolidation. Okay, so we can draw a horizontal here, and we're going to line up to this point, And you're going to notice that I have a measured move here. Now, we did discuss BNB a couple of weeks ago, right? So this is going to kind of rinse and repeat that, but we're going to add some nuance to it. So hopefully you remember this bear flag. So there's the bear flag setup. You drop down and then you flag out, right? That's a bear flag. So there's your measured move. And we've already been working towards that goal, the low here, about the 152 and a half level, give or take right there, okay? So as we're working out this bearish trend, number one, we do not ideally want this 185.80 to break. The reason we don't want this to break is because it takes all these people that have bought all those BNB and puts all of them underwater. And that's usually what happens is it leads to more selling pressure. And we don't want that selling pressure to exist in the market. So ideally we don't get under here, but there is an alternative scenario, which is this kind of a scenario. And I don't have my top trend line here. I'll draw it right now. This is called a pennant. Okay, so bigger picture, this is a pennant, and it does encapsulate our measured move. Now, one reason that this pennant could work instead of that horizontal line is just due to the length of this base. This goes all the way back to early 2021, so we're talking 2.5 years at this point. A lot of these people may have already sold their BNB. Okay, so we may not have that much pressure, and the volume kind of does show that a little bit. You know, we're not rushing to get out of this asset unless something happens with Binance. That's a whole different story, right? So let's move in here a little bit. All right, so we're in this large consolidation. What happens as we move lower? Okay, so we moved lower out of this large rising trend line. We moved into this bear flag. We had our inverted head and shoulders here that we discussed, right? A week or two ago. That popped up, that worked. Now we're waiting to go lower. So your support levels here are recent lows, 203.70, and then past that there's really nothing on the chart, at least. The only other one you have is that level we mentioned earlier, 184, give or take, right? I'm drawing the line on the chart. I'm not hitting the absolute low, but that's the level that we're looking at. So we could come down to here. As we cascade through that, we could head down here towards the 184 level. Now, ultimately, this is the full measured move, 152.50. If I click on it, it'll say right there, 152.50, okay? But there's yet another way that you can kind of ascertain how this is going to transpire. And you can use that using Fibonacci's. So you can grab the Fibonacci tool. It's just underneath the trend line on your trading view. If you don't have it on here, you click on the arrow. It's the first one up, Fibonacci retracement. You're going to grab it. You're going to hit the breakdown point right here at about the 305.10. You're going to go all the way to this spike low here at about 221.20, and you're going to click. And that's going to give you some levels that you could kind of hit on the way down. Let's go full screen on this. Okay, now I want you to keep in mind the full extension. Let me explain how this works for those of you that are unaware. Fibonacci ratio uses the Fibonacci sequence to kind of give you different levels on the chart. And oddly enough, it works a good amount of the time, so I'm not going to knock it. But some people use it in alternative ways that don't utilize the Fibonacci sequence, which I think are a little bit invalid. In my opinion, the more lines you add to the Fibonacci sequence, the weirder it gets. So just try to stick to normal Fibonacci ratios, which are the 236, 382, 618, and then the 1. That's your general Fibonacci sequence, okay? Some people put a 78 in here. Some people put all kinds of other ones in there, but those are the general ones, okay? So on the extension of the downside, notice we stopped at this 236 level. Okay, that's something that happens if you move down, consolidate, and then continue on. The 236 level is a normal profit taking point, right? And so that's actually right where we stopped on the way down. So we can probably argue this is going to respect some of the Fibonacci rules as we go lower. So you can almost like stair step your way down on the fibs, basically, okay? All the way down here to the 160.40, which is the one which definitely takes into regard my 75% rule about a measured move. So right here, that's more than 75%. And actually, I use the fibs for that too sometimes. Actually, I have a 75% ratio on my chart, which is this 25% ratio. So that's the 75% line, and that's how I measure 75% actually. For those of you that wondered, how do you measure 75%? I use the Fibonacci tool because I'm lazy. And so that's at the 169.70. So that would be a win in my book, the 70. I already forgot what it was. What was it? 169.70. That would be a win in my book. Full extension would be the 160 to the downside. And so that's how you can take, if you're finding an asset you want to go up or down, right? This works in both ways. You want to do something like this, and you want to make sure that you can duplicate it. So use that Fibonacci tool, make it easy on yourself, only have these levels until you learn more, and then you can learn about other strategies. But that's a very vanilla way to do it, which I think is a great way to start with Fibonacci's. Grab the tool, lay it out, only have the 236, the 382, the 618, and the full extension, which is just 1. These are all percentages. So this is 23.6% of that move we took, 38.2%, 61.8%. All right, so on and so forth. So I know that was really technical. So if you have any questions, please leave them in the comments. I will respond to them and maybe even address them in tomorrow's video. All right, so let me know if you have any questions regarding any of that. And next up is KAVA. KAVA, let's go down to the 2-hour time frame for this guy. This is a more immediate trade, and we've already discussed kind of in length over the past couple of weeks about the H patterns that were forming in the market. And if you remember, the H patterns didn't work out. We kind of bounced out of those, and a lot of those turned into these larger cup with handles. Okay, so these are inverted cup and handle. And let me invert the chart and show you what a normal cup and handle looks like. For the most part, people learn about bullish chart patterns. They don't learn about bearish chart patterns. But any bullish chart pattern can be inverted into a bearish chart pattern. So that's what we have here. So to make it even more confusing, I've taken our normal bearish chart, inverted it, which you can do by right-clicking where the price is on the chart, and there's an invert scale right here. Okay, you can click on that and invert the chart to your heart's content. So this is the normal chart, and this is the inverted cup and handle. So what's happening here is that this is rallying, KAVA is rallying in what is a bearish trend, right? So what we want to do here is try to ascertain, okay, is this something we can take advantage of? Well, it is. So first thing first, we're going to want to notice as we rally, what could be places we could stop, where are our resistance points. And one is right here, which we're really close to at the 681, 68.1 cents, depending on how you want to call it. I'm just going to call it the 681, okay? So 681, this could be a break. This is what I call a breakdown point. A breakdown point is that after a trend of any kind, it could be an uptrend, could be a sideways trend, could be this downtrend, you figure out where the market just free falls. And where the market free falls is where it's likely to find resistance again, all right? And so here we're finding resistance here. So if you're so inclined, what you could do is open up your trade. You could put your stop right on the trend line there, which I actually don't recommend doing. You can do it. A lot of people do it, but I don't recommend it. The reason being is that everyone kind of sees these levels, and what they do is they move it up. They spike through it because there's what's called liquidity there. There's orders there, and they have to get those orders, okay? So what you can do is, number one, wait for a good signal, which I don't think we have a good signal here yet. These are 3 bullish candles. This could continue and actually never give us a signal. So let me give you a negation point. If we get past this level here, which is the 69-cent level, we have to rethink this entry, okay? First and foremost, we don't want to, if it goes too far in the wrong direction, it's not a trade anymore. It's just a failed signal, which is fine. I'd rather have a million failed signals than a failed trade, all right? So, but let's say we get a good signal. Let's say we get a stalling candle. Let's say it spikes through here, maybe comes up here and then comes back down, okay? When that happens, we know we can place our stop loss at that level. So right now I'm just going to place it arbitrarily here at the 69-cent level. And let's say we do get entered right here. Let's say we pop up and we come back down. First of all, just by doing that, just by waiting for this trade to come to you, waiting for kind of a real advantageous point, you're taking a very tight stop loss, which gives your risk-reward ratio, before we even consider a breakout, we have a 5.67 reward ratio, okay? So this means that if our target is just to the prior low, we're going to make 5.6 times our money of what we risk. That's excellent. You want a minimum of 3, in my opinion. You can go down to 2.5 or 2 if the chart's really good. But in this scenario, we have an inverted cup and handle, and we want this thing to go further than that. So as you can tell, as we add a profit to this, it's going to make this trade even more ridiculous, which is good because you want the extra leeway. So one way to approach how to figure out a target for a cup and handle or an inverted cup and handle is you can take the depth of the cup right there. So that's where it came down. We spiked up. So that's our depth. We're going to take that to the breakdown point, or the breakout point in this case, which is the low, the recent low. And that's going to give us a 52.90 target. So 22% gain, 16 risk reward ratio. If it plays out like that, the more this squeezes, if this is something you want to do, I think the more you kind of have to pay attention to it. And you can see we're still rallying, okay? So you don't want to preemptively buy this or short this in this case. You don't want to do it preemptively. You want to wait for the failure. If you're expecting a failure, wait for the failure, okay? All right. So that's it, ladies and gentlemen. That's all I got for you, BNB KAVA. Let me know if you have any questions in the comments below. Any feedback from me, I'd appreciate it. Let me know what else you'd like to see on my show. All right, ladies and gentlemen, have a good day. I'll see you next time on Altcoin Buzz Trading.